Are you struggling to reduce your cybersecurity risks and meet compliance mandates? Wishing you could be proactive instead of reactive? You need a solution that integrates cybersecurity together to make it affordable, accessible from anywhere, and simplistic, so you can gain a return on investment on your resources. Cyrisma is your answer. It gives you a single interface to identify sensitive data, vulnerable systems, insecure configurations, track progress, and assign accountability. Visit securityweekly.com/Cyrisma today for a 7-day test drive and impress your leadership. That's Cyrisma, Cyrisma.
All right, welcome back to Security and Compliance Weekly. We're talking cyber insurance, second segment. Before we jump back into the melee, do have a couple announcements. Do you want to stay on the loop on all things Security Weekly? Do so by visiting securityweekly.com/subscribe. You can go there, subscribe on your favorite podcast catcher. And as a boomer, I can say, what's that? Your own YouTube channel, our own YouTube channel, or you can sign up for our mailing list. And by all means, please join our Discord server. As a side note, we put out notices of what our what our shows are going to be about. The conversation on cybersecurity started over an hour before we started broadcasting today on Discord. I mean, we were knee deep in it, and we hadn't even started broadcasting yet. Also, our next live webcast will be on March 18th at 11 a.m. That'll be Eastern Daylight Time, I believe, by March 18th, where you will learn how to prepare Linux hosts for unexpected threats, which I think means attacks. Visit securityweekly.com/webcasts to register now. And of course, if you missed any of our previously recorded webcasts or technical trainings, you can still find them in our archive. You go to securityweekly.com/on-demand. All right. Want to jump back into it. I wanted to, before I let the dogs loose again, I did want to ask a question or two of my own, just sort of, just trying to pull it back to some semblance of what we advertised the topics was going to be. I think we've had a great conversation so far. Cyber insurance. My question to you guys, Nicola and Vike, is what, other than your brokers, you're trying to sell stuff, it's what you make a living for. What are the reasons why companies would approach you? And maybe the first question is, are you approaching them and, hey, have you checked out your cyber insurance policy lately? Or do companies come to you and say, gosh, I've been reading about all this stuff on the news, and I feel like I need a cyber insurance policy. So 2-part question, just to kick things off. What are the reasons why people think that they want to talk about getting a cyber insurance policy, and versus what are the reasons why companies really need to consider having a cyber insurance policy?
So companies come to us, usually it's our outbound reach to go say, hey, have you thought about cyber insurance or any other kind of insurance? I mean, one of the newest types of insurance is an active shooter insurance policy, which nobody had ever thought of. But we're usually informing our clients or our prospects about these sorts of things. Occasionally, we will have somebody call us up, email us and say, hey, I saw front page of the Wall Street Journal. Can you help me out? I hear you guys are good at it. But usually it's we're the one forging the relationship. Part 2 of your question for why they think they need it. They want to feel some sort of sense of security, and they want to protect their bottom line at the end of the day. Insurance, like you guys said, is a risk transfer mechanism. You pay a certain dollar amount for a lot more coverage than what you otherwise would have. So instead of paying, instead of creating a savings account with $1 million in it in case you have a data breach or in case there's a ransomware attack, you pay $1,000 a month or even $1,000 a year, and you have some sort of protection in place to protect the business.
So real quick follow-up question, and then I'm going to flip it back to Liam, because Liam has like sort of a real-world scenario question he wants to ask for you. So things that cyber insurance typically pay out, or what people think it pays out for. You have an incident, something goes wrong. You're paying for Well, and this is in the form of a question. Does cyber insurance typically cover costs associated with dealing with the breach from a PR perspective and having to placate your investors and your customers and all that kind of stuff? So sort of, I don't know what that's called, incidental costs, fines, costs associated with, in the PCI world, if you're caught with your pants down and lose credit cards, you typically get fined. Yeah, I finally got on the board.
Yay!
Jail time? Does it cover jail time if you pay ransomware and it's illegal?
Well, it's my list, Josh, but I'll add that to it. No, I won't. Costs associated with recovering, and maybe that's paying for paying the bail for Josh, but you have to pay for new technologies or different technologies, or even paying forensics investigators to come in and figure out what went wrong. So, recovery costs or costs associated with recovering. What else? Ransomware. That's kind of like its own category, and we've already touched on that a little bit. But what are the things that a cyber insurance policy typical covers in terms of what you would actually as a company get money for? Let's put the question that way.
So Jeff, great question. Think of it like car insurance. If you're in an auto accident, you've got to fix your own car. You've got first party damages. You got to fix your car and get your car back up and running. You also have third party liability. If your car hits another car or a school bus, you're open to attack. You're going to be liable. You're going to be sued. So the cyber insurance policies are split into first party coverages and third party coverages. So the first party is we're going to do the forensics. We're going to figure out how the bad guys got in. If there's a ransomware attack and your systems are shut down, newer policies that are more sophisticated might even pay to replace your hardware that just got turned into a giant paperweight. There's also the third party component that if you have a data breach and you lose everybody's social security number or credit card, we're going to protect you from the lawsuits that are coming in. Mike, you want to dive into a little deeper, maybe?
Yeah, and I think there's a few other nuances. So I guess most good policies are going to, and we touched on these already. So they're usually like 5 sections. So it's the third party liability that Nickel mentioned. If you get sued because you don't handle data or you don't secure your network, so PCI fines and penalties is closely related to that. So there's a regulatory proceedings, fines and penalties, but then most policies are going to actually add an endorsement or a separate set of language that covers things like PCI or self-regulated entities. So they're not laws or regulations, but it's something that could happen if you have a breach or something goes wrong. Then you're going to have your first party incident response expenses. So it's going to be lawyers, forensics, incident handlers, public relations. Then you're going to have your restoration coverages. These are the things. So after things are stable, getting back up and running, restoring data, systems, like Nickel mentioned, hardware. Business interruption is a huge one now. So the lost income during time of disruption, lost income from reputational damage, which is really hard to measure. And then you're going to have things like cybercrime. So somebody, there's tons of scenarios where this can happen, but at the end of the day, somebody steals money, social engineering, somebody breaking into a bank account, what have you. So those are kind of the key things we look for. And of course, like we mentioned earlier, every single policy has different language and definitions.
So last quick question. Hold on, Josh. Last quick question. Go. My show after. You use the analogy of car insurance. Are there things like different rates, different levels, different deductibles that you pay, ranges of coverage, limits of coverage, all that kind of stuff similar somewhat to car insurance?
Yes. I mean, in the fact that, you can buy a policy that has $1,000 deductible, but we have clients that have $50,000 deductibles. You can buy limits of $1 million. You can buy limits of $50 million. So there is a right sizing or an opportunity for the business owner. And admittedly, it's an imperfect science to say how much insurance should I buy? Should I buy the $2 million policy? Should I buy the $10 million policy? There's no right answer. At the end of the day, it's a business decision by the business owner to say, yeah, $2 million only costs me $5,000 a year. $10 million costs me $8,000 a year. I don't see that there's enough. I'm not going to sleep better at night purchase the extra insurance. Or some business owners are very risk averse, and they do want to make sure that they've got as much cyber limit available to them as possible.
Yeah, but if you're not pushing them to go after this, then we can actually sit back and say, do you really care about the client?
So let's do this
to expand their bounds, like actually do security.
Mm-hmm.
How can we sit there? How can we sit here and say, that insurance carriers actually care?
Our conversations start with let's look at your whole cybersecurity structure. Let's look at your whole cybersecurity program. Are you talking with your IT folks to figure out whether or not you are protected in the first place? Because we're not interested in working with people that they don't care about their own systems, because the cyber insurance is not a replacement for security. They work in tandem. We dovetail with the IT folks.
And then the other thing that I add here is that a lot of our clients are small and medium-sized businesses. So they might not have the expertise, the resources, the capabilities to do everything that they absolutely should be doing. So there's the ideal, there's the reality, and then there's like this messy kind of in between. So what we're trying to do is make sure that, our clients might not be perfect. We can push them to do the right things. This might be the only conversation that they've had about cyber risk management. So even if it's not perfect, it's still a really good discussion. And then we're going to be able to push them along the way. We usually, like with a lot of our small and medium sized, we come up with a plan. And we as PSA aren't a cybersecurity company, but we absolutely make recommendations. We push our clients to do things. We care because we want our clients to stay in business, because if, selfishly, if they go out of business, we don't have clients. And then the other piece here is go ahead.
Well, hold on, Josh. I want to jump in. Liam was going to give us sort of I think a real world scenario, and we've had requests on our Discord server for you guys to just kind of walk us through, sort of a mock, we're a company interested in insurance, give us your pitch, so to speak. I'm hoping we can sort of squeeze the two together. Liam, why don't you give us your scenario, and let's try to see if we can work from there with give them the setup, and then you guys say this is how we can help, because that's what people are asking for.
Yeah, so with it's a client I'm working with, and they have to be NIST 800-53 compliant, right? And they've actually outsourced a virtual CISO, and the virtual CISO is going down, looking at various different elements on there, and he's offsetting some of the internal controls and says, "Oh, you can offset this to cyber liability insurance, and we'll put this down as a POEM." But what I want to know is how does that person get to that point to say that is exactly what they're doing, without a cyber liability insurance coming in and saying, okay, what questions are we need to answer or ask? Because you're saying there we come up with some recommendations. So does the cyber liability insurance crosswalk its insurance to different controls, so people like that can come in and state that they can offset it or put a POEM in place? Because I was sitting in that meeting and I'm going, you shouldn't be doing that. But I was the outside person looking in, whereas the person there, the virtual CISO, has that say, and he's looking to do that. And they're going, "Oh, this is great, because that means there's less work for us to do because we can offset it." And then that's where business risk gets confused to cyber risk, and certain things can be pushed off there. So how do you go about from the beginning to make sure those type of things don't happen, but at the same time, the company understands exactly what needs to be done in order for them to get a fair market value policy that covers them in many different scenarios?
So unfortunately,
there's a lot to it in that one.
Yeah. So cyber insurance, the process that we go through as a broker to satisfy the carrier requirements to write the policy is completely separated from the compliance. So I don't have a really good answer for you to say how this control that they're not doing would be covered by insurance. If they're saying we're gonna buy down our risk by putting controls in place, but we can't do everything, so we're going to offset that by transferring it to insurance, I think that's the better way to approach it, but it's not going to line up. Our questions
let's set up this way, Mike. Not not wanting to reveal who the company it really is or anything like that. So some company that's similar to the one that Liam describes, and all you know is they have some sort of regulatory compliance, and notwithstanding the whole, they think they can get away with their security requirements by just covering it with cyber insurance. You get a company that approaches you, or you start a conversation with a company that says, well, we're an IT company, we're a developer, we're a product company. We know we have some sort of cybersecurity obligation because of regulatory standards. What kind of probing questions do you ask them to try to find out who or what they are? Just kind of, if you can briefly, just kind of walk us through, at least at a high level, how you would walk them through your process to the point where you can say, this is what you should have, and we want to underwrite, or we want to broker a deal.
Yeah. And I think it starts with understanding their business. And so especially technology companies and products and services companies, in order for us to really understand the risk and present that to the cyber insurance marketplace, we usually, and Nicole can attest to this too, we start with sitting down and having them walk us through their business, what their product is. We have to go through, because of the questions that we have to ask, we've got to understand how their network is set up, how they're storing data, how they're managing their clients' data, if they're hosting data for their clients, what they're doing with the data. We do get into the regulatory compliance questions. Are they compliant with any specific framework, law, regulation? So we go through this process, and then we have a series of questions about controls. And this is usually where the gaps come up and the recommendations would result. So it's just built into our process for how we have these conversations. And usually there's multiple conversations. And then what we'll have to do is, if it's a complex organization, we'll usually put a narrative together that goes in addition to the questions that you answer on an application, which are going to be pretty generic, honestly. So we've got to add some color to that. So it's not just, the application is really important, but a big part of our job is not only understanding just the black and white of what's on that checkbox application, but what do they actually do? And then especially for technology companies, it's really important because the definitions of technology services that might be covered are very different from one policy to the next.
How are you guys validating any of the responses you get from a prospect? They say that they're subject to, let's say, PCI, mostly because I'm behind in the counter, and so that hopefully conjures up, well, then there's all these things that they should be doing, and you ask them, or it's implied if they're PCI compliant. I guess that's the first question. You're supposed to cover, supposed to be compliant with PCI. Are you? Do you have an attestation of compliance? But given that, to what degree do you sort of validate any of the things that they've said, especially if they're like, oh, we don't have to do that. We can just let cyber insurance cover it and we're done. How do you validate anything that they're saying? So
first of all, there's a warranty statement on every application. So the goal is to not lie or make stuff up. So hopefully that's not the case, but there's only so many things that we can actually validate. Because again, we're not doing an assessment. We're not going in and testing controls. The best way that we can validate are cases where we find a client doesn't have something that's critical, and we make a recommendation for them to go implement it. And we know the service provider doing it, and we can verify that it's been done. Or things like policies. So a lot of the cybersecurity type of work that we do might center around policies. So a lot of times we'll find clients that don't have like incident response plans. Now we can help clients get started with that. We don't, we're not attorneys, so we don't, write policies for people, but we can do a lot to get them started and satisfy certain requirements. And then we'll send that to a carrier. So it's easier for us to validate the policies, the procedures, or when we find a client doesn't have a certain type of control that we help them implement, and then we can validate. But again, getting inside of a network and doing anything beyond an external scan is just more than we have the ability to do right now, unfortunately.
Please, for the love of God, do not send them to a generic, here, we're going to make you a compliance thing website. Please.
No,
don't do it. It will cost you more in the long run. Don't do it. I can't.
Good advice, because I've seen some of those out there. Yeah.
You
We
know,
won't, we promise.
it's bad for everybody.
Mhm.
Yes.
It is. It's horrible. Go ahead, Josh.
Josh, we've lost your
Josh, you're on
audio.
mute.
Josh is on mute.
You're on
It
mute,
helps
Josh.
when I unmute myself.
Feel like we're on a Zoom call. Jeez.
Oh,
No,
shut
I'm
up.
just messing.
So,
I'm messing.
guys, we've said a lot of things in this call, and you've had. I got to tell you guys, you've been the best cyber insurance people we've had on, I think, ever. I mean, I don't mean anything rude to anybody we've had on, but like, you've really had good answers. But I think there's some things that you're blind to, and I don't mean this to be rude, but you're so in, forest for the trees type of thing. You're so in your world that you're not seeing some things, and I'd like to discuss these a little bit, and just for a few minutes, because I know we're running short on time. But I think that we've talked about how this is an immature market. We've talked about how if I provide value, it costs me, and then they're going to go to the cheaper option. Not in those words, but roughly we've said that several times. We've talked about how we just don't do it that way. We've talked about, we don't go in at the start. We can't. The cost they'd go to somebody cheaper. That's kind of what I'm talking about. And so I'm hearing, I'm still hearing it costs us too much to provide value. And not you personally, please understand. We're saying this about the industry as a whole, okay? But what I am saying is I want to know, when will this market be mature? When will we get to where we need to be, and what will that look like? And I want to hear it from you.
So I think, if I had a magic wand and I could wave it and change things, or I had my own insurance company to run, I could be much more effective. Unfortunately, we
Make
can't.
him a broker on his own company. I want to see him do it. So go ahead.
Yeah. So I think there's a few things that need to change. I think we have to have some basic level of expectations of security for businesses that they have to meet. And we don't universally have that, especially in the small and medium-sized business space. We just don't. So the other thing that we have to have is the insurance industry has to change the way that they underwrite. And I think we can all agree on that. You've got the traditional underwriting models that are based on the law of large numbers, which we can, again, all agree it doesn't work. Instead, you've got collecting very dangerous risk based on past performance. So I think what we're going to have to do is shift less from the things that we know are important, and that's how we underwrite. Rather, the things that we know have to be in place, and the things that we don't know, we're going to have to figure out so that we can better underwrite that. And what does that look like? Maybe it's more real-time underwriting. Maybe it's looking at things that are happening in the wild and trying to figure out how that impacts the risk businesses are facing. Maybe my ideal... Yeah, go ahead.
I've got a really random, stupid question for you, but it's where my brain is right now. Is there such a thing as an insurance policy for insurance companies to insure them against having to pay out large?
Yeah, that's the reinsurance companies. That's the reinsurance
Dog, I heard
companies.
you
We
like
talked about
insurance,
that.
so I'm going to insure this station to ensure that you have insurance.
Remember at the beginning of this whole segment,
It's definitely a business model.
I said it goes from the brokers to the carriers to the reinsurance companies. The reinsurance companies, and guys, correct me if I'm wrong, that's where underwriters, carriers hedge their bets.
Mm-hmm.
Yes.
Because the old-fashioned view, and I'm behind on the counter, so I'm going to say PCI here randomly to at least tie. The old-fashioned view of insurance is you get a lot of people to buy into the policy, knowing that not everybody's going to pay off, and you're all invested in that collective risk, knowing
That's the
that
group
you
of
won't
large
get
numbers.
Yeah, but Jeff, PCI
that
is not the
can't
answer to
work.
everything.
That can't. You're just saying that because you want to take the lead, PCI. PCI.
Look, but if we could only pen test all the companies that were going to be up for insurance, these pen tests would show, in any kind of pen test, it would show that the actual risk going on. So if we could pen test on a long-term basis, consistently and continuously pen test.
Well, other than trying to rack up the counter, my question to our guests is if the conventional old-fashioned get large groups to buy into it, if that doesn't work, if this industry to some degree is relying on these reinsurance, is that the term, Josh?
Yes, that's correct. That's correct.
That just makes it sound very dubious. Like why
Okay, so actually,
here's my
question
for
a second. Stop.
Hold on. Both of you. Hold on.
No,
Jeff, finish.
All right, fine. Jeff, finish.
Well, I guess my simplified, boiled down question is, if I'm a company that's got limited budget, limited resources, and I'm looking at, I have to run my IT department. I've got to do something in the way of security for whatever my motivation is, whether it's regulatory compliance or, just it seems like the thing to do. And I've got to, cover the cost of the auditors coming in once a year to kick the tires on me. I guess my question is, what portion of my scant budget should I be allocating for this thing called cyber insurance, regardless of what it is or what it does or what it promises? What do you tell your customers is the right amount of money to invest? Either percentage wise or however you slice it and dice it. How do you have that conversation with your customers?
It's a difficult conversation. There's no one percentage, Jeff. It's more around what can you afford, what's in your budget. So, it also depends on the size of the business. A $5 million.
Nothing's in my budget. Tell me what should be in my budget. Is it a percentage of overall budget? Is it a dollar amount? Just
it's a dollar amount. Yeah. It's a dollar amount because the insurance policies are based on either monthly or annual premiums. And so we have to say your annual premium is going to be $10,000 a year. Is that something that is in your budget? If not, well, okay, then you can't purchase the policy. You're going to have to live with these risks.
There's a trade-off. The more secure you are, and that you can prove you are, the less you're going to have to pay in premium. But the less I pay in premium, the less money you make as a broker, as an agent. Okay?
True.
So it's a perverse incentivization from the insurance point of view to have clients that are too secure because you're going to make less money. And I don't mean
inverse?
Perverse.
Yeah.
Okay.
Yes.
So it's a perverse incentivization to have companies that are too secure as clients. Now, in a sense, there is still a regular incentivization because the more secure they are, the less that they pay out. But again, other than extreme events where you have mass swaths of clients disappearing off the face of the earth, where you lose all their premiums, one here, one there, that's sort of normal churn, let's be honest. Okay? So it's interesting that we've actually perversely incentivized on the broker side. On the underwriter side, we've perversely incentivized because if they say we need this level of checks on what you're doing to make sure that you are secure, so we're lowering our risk, they're just going to say, well, we're going to go with the cheaper underwriter, the cheaper carrier over here, because the broker has 10 carriers. I'm making a number up, whatever. And as you said, 5 over here want solid checks, say a pen test or whatever, so that you can actually see if they're secure. These 5 don't. Their costs are lower. So guess what? I'm going to go with the cheaper ones. We've perversely incentivized the broker. We've perversely incentivized the underwriter. Have we perversely incentivized the reinsurance companies? That was a question, non-rhetorical.
The reinsurance companies probably wouldn't. The reinsurance companies are looking for as little risk as possible. They don't want
they're the only ones with proper incentivization, but they're the only ones with the least amount of contact with the end client.
So I would kind of disagree with you there because I think
go for it.
While there is a perverse disincentive to lower premiums because we get paid less, the cost of a claim is still such a headache. There's a human capital cost that you never want to deal with a claim. I mean, you still lock your house, you still buy smoke detectors for your house. You still have to do the right things from a security and compliance standpoint because the cost of not doing it is still the headache of not doing it far outweighs what you would have paid in insurance premium.
Hey, quick question for you. You talked about how you guys are not, you're not the underwriters, and your job is done once you broker the deal. I get that. Do you ever, right or wrong, get a call from your customers if they've had a breach, if they're trying to file a claim? Do you play a role at all in there in terms of sort of?
Absolutely. That's a huge part of what we do. And this is where I think.
Talk on that a bit. Yeah.
Go ahead.
Expand on that a little bit. Tell us what you do.
Yeah. So I think Nichols' point about disincentive for claims, the claims are difficult. They're challenging. They come on Friday nights, Saturdays, and we're usually the first call for our clients. And it's stressful, especially if you've got something like a ransomware event going on where this is never, something they've never dealt with. Essentially have a gun held to their head and timers are clicking down, and it's really difficult. And our initial job is to be kind of the quarterback to marshal the resources that are available through the policy. So ideally, if we can get them set up with an incident response plan that aligns with the services provided through the policy, the process goes a lot smoother, but that's not always the case. So we're involved from day one. We help coordinate with the carrier, usually bring in legal counsel to take over, that then will bring in forensics, incident handlers, and run with the claim from there. But for our larger claims, I'm in contact with our clients at least a few times a week throughout the duration of the claim, which can take months. So it's not a auto claim where you call and you get your car repaired. This is an ongoing saga. And early in the claims, I mean, we're talking throughout the day, evenings. It's stressful.
Gotcha. But I would imagine, I think we all would imagine that the first call you get is, I thought my policy covered this.
It's usually something weird's going on. What do we do next? I know we talked about this, but who do we bring in next? And it's usually and this is where I think there is a gap between the policies and the IT community. And I think ideally, if we can get those things closer together, because usually there's a third party for most of our clients doing the initial detection. They're the ones doing the initial remediation, and then we're going to bring in a forensics company that's going to take over that investigation. So there's this handoff and coordination after the fact. When the invoices start coming in, that's where, hey, does my policy cover this? And that's where the discussions and the claims reviews and all that kind of stuff takes place. But the initial question is, what the hell's going on and how do I stop it?
So
either I was sleeping or I missed it. I just want to ask a quick question: is when a declaration is actually happening?
Finally, we get Liam to admit he naps on air. Anyway,
yeah, I took a nap.
It's not napping. He's passed out from drinking.
Yeah. So if there's a declaration, right, of a entity for any reason, so at what point does the cybersecurity, the insurance company says, nope, we're not going to cover you? How do you come to that conclusion? Or is it we're going to go in, send people in first, does this, and then somebody comes back? Because that's always a fear factor. I get that asked of me a lot. So what if I declare and they say no, and then I'm out of all this pocket? What is the process that you guys go through from an insurance company? Obviously, you're the broker, but you're going to see some of that as you go along to make sure that, okay, are we going to cover this? Because is there a fine print that they didn't do something, we discover it, and now they're not, we're not going to actually allow for the declaration, or the insurance policy is void.
Well, so
you signed up for HIPAA and now you're doing PCI?
Yeah, there you go.
Well, every claim's going to be different, but there is some flexibility in the policy. Usually, you can talk to an attorney that is hired by the insurance company to do the initial analysis to determine the scope and circumstances of the claim. And then that's also a big part of what the broker's responsible for, is to talk through those details to help the client understand the intent of the policy. Now, the ultimate determination of coverage is going to come from the carrier, but the way that these policies are written right now, if we do our job correctly, we're setting the stage up front for the intent of the policy and what it's designed to cover. If there's something wildly outside the scope of the policy, like some policies, for example, aren't going to cover things like personal identity theft costs. That's a whole different thing. We're seeing more of that now with like SBA loans and breaches that happen at some state agency, where the business had nothing, there's no loss by the business. So if it's not intended to be covered, we can usually determine that up front. There are some small nuances where things might not be covered that we wouldn't really know until we get through the details and we look at the invoices. And that's another reason why a lot of the carriers have service providers built in on their panel. Again, these are third parties, not the actual insurance company, but they're providing the services. So they kind of pre-approve them to make sure that that's covered, because every incident is going to be different. So you might do one thing on this, attack versus this. It might not exactly meet the language, but as long as it's within the scope of the intent, it should be covered.
So
what's the
let me
ratio right
ask you a
now? How many
question.
people have? So go ahead.
Go ahead, Liam.
My turn, because I am the host after all.
No.
Yes, Daddy.
I'm curious. Going back to, you're getting calls from companies. They're going through a situation. They're asking questions. On paper, you guys are representing the insurance companies, right? The carriers. How do you, but it's in your best interest as a company that wants to stay in business and grow your business and keep your customers to do right by the customer. How do you balance that? Open-ended question.
We want to make sure that the policy up front is as broad as possible and can cover the most amount of claims that might come up. So one of our art forms is to look at these insurance policies before we put them in front of our clients and say, yes, here are 5 different options for you, but really only 1 or 2 might make sense because they don't have these exclusions, or the definitions of services covered actually match what your business is. So we want to make sure on the front end that the insurance policies are going to pay for claims. So then when we do get the call at 5 o'clock on a Friday, we can say to them with confidence, yes, ransomware is covered under your insurance policy. So it's an ongoing conversation. It starts early in the process. So that's why it really matters what you're purchasing, because if you're purchasing a policy that doesn't cover social engineering fraud or doesn't cover ransomware, it's not worth the paper it's printed on. So there's a lot of trust that our clients put in us to make sure that they're getting the right coverage. And it's a big onus on us to make sure that the coverage actually exists too.
All right, so let me ask another question. So you got a customer, they're a merchant. They're a local brand in Baltimore, and they sell widgets. And so they're responsible for PCI compliance. You've lined them up with a policy. They've got cyber insurance policy for whatever. They have an incident. They have a breach. They have a credit card.
Do they need a pen
theft.
test?
So they've been
No.
Their PCI is at risk. Where do you fit in terms of, you've got the carrier that says, well, were they PCI compliant initially? Okay, let's give them the policy. But then they got breached. So, the mantra with all the retailers out there that have been breached, that are, get their credit cards stolen, is always, well, they were they were not PCI compliant at the time of the breach. They might have been PCI compliant at the time that they were, most recently assessed. Where do you fit into the process of sort of either validating their claims going in where they were underwritten in the first places versus current state versus what they need to do to get to future state? If that makes sense as a question.
It does. So I think the application process that we go through, we do for PCI compliance, for example, we do capture if they're PCI compliant, at what level, when was the last certification date, and insurance policies are annual. So we renew each year. So we would hopefully get up to date with it at the next renewal. And then this again is where the language comes into play. Some policies are going to say, PCI compliance is covered, or fines and penalties are covered at full levels. However, you must be PCI compliant within the last 12 months. Other policies aren't going to have that language. So those are the types of things that we point out when we present to clients, so that they can hopefully understand, this one might be cheaper, but you're going to have that language in it versus this one that doesn't have the language that's going to offer broader coverage. But again, there's no point in the process where we're actually going in and pulling any, certificates of compliance. We're not doing anything beyond what's on those applications unless we're more directly involved with that process where we would have the information.
Jeff, can we bring these guys back?
Oh, absolutely.
Yeah, I definitely want to have these guys back, but I also want to take our conversation in a different direction, if we will. Let's talk taxes for a quick second, right?
Taxes?
So, yep, just follow me.
Right.
When a company is doing their taxes, like we over at Red Lion, we just went through this exercise. We had to go through and define out what we were doing for R&D, and a lot of the tax deferment, and that's not the right word, so please don't kill me for it. a lot of the R&D costs get written off.
Very quickly, Scott, PCI, just to take the lead.
Not PCI. So,
damn it,
the R&D effort gets written off in the at the end of the year for taxes, right? What is cyber insurance doing to cover the cost of lost R&D time? Is that something that's being baked into premiums? Is that something that we need to raise awareness about? What is your guys' take on this?
Interesting. I don't know.
Yeah, so there would have to be.
Good thing they're not asking you, Josh.
I have to learn more about like the. So we would need to know the.
Yeah, I don't think it's something they would. Yeah. Let's do this. I'd love to bring you guys back and talk more about what you think the future of cyber insurance should be.
No. There's no policy that covers R&D. Like this is one of those big gaps that we need to discuss at some point.
Yeah, that's where I'd like to learn more about what the losses are, where you're going with it, because I'd like to learn more. There might be business interruption coverage, but I doubt it would cover exactly what you're talking about here.
Well, I'll give you an example. Let's take SolarWinds, right? And SolarWinds with Sunburst, that was used to infiltrate and gain access to R&D software and other things that was done through a cyber hack. Now, is that covered by cyber liability insurance, and does it cover the cost of any R&D as part? So
are you talking about like the value of intellectual property, like the
potentially, because it's been compromised, right? So it's been accessed.
No, that's a good question. Yeah, that's excluded right now, and I think if you can figure out a way to value it and insure it, then I think there's a possibility, but I don't know how right now you would do that. Because if, let's say you have a breach and it's R&D and you say, we thought this was going to be $1 billion idea, and you claim that, how do you verify that? So it is a gap. So I think it is worth a discussion.
Yeah. And then dealing with containment, cleanup, incident response, and loading all of that into not only cyber insurance but also into compliance standards is also another really big gap that
I think we asked
looking at.
Yes, I think you asked a question about balancing our relationship with carriers versus clients. I had a conversation with a carrier the other day, yesterday, about language that I didn't see in a policy that covered specifically the things you're mentioning: incident containment, handling, remediation, restoration. And when we don't see the language there, we push back on carriers. And if we don't get answers we like, we put it in our quotes and tell clients, this is what we didn't see. So you're not going to get language that we like here, but you might hear, and that's going to affect the premium as well. So we are raising questions with carriers, and we do the best we can. And sometimes they change language. I mean, early discussions we've seen policy language change over the years based on these discussions. So discussions we have with clients, gaps that we see in policies. If there is a feedback loop that does improve coverage.
So, wow. Do insurance companies pay for open S3? This is our last question. We're done after this. Do insurance companies pay for open S3 buckets? Question from our Discord from M. And Liam, actually.
So again, what would be we'd have to figure out what the loss would be. Like, is it a...
I'm not sure I understand the context of the question, so I'm...
Okay, assume I've got an S3 bucket that is unencrypted. It's open to the world. It can be seen with the web browser, the S3 browser. And I've got creds in that bucket. So I've got credentials in that bucket for whatever reason, because I'm stupid. Okay. Mm-hmm. And those creds get dumped onto the dark web, onto the black market, onto name your.
So it becomes the weakest link in the cause or the source of a breach.
And I've set the password at SolarWinds 123 exactly. Scott and I had the same thought at the same moment.
Silly interns.
Is that something that an insurance policy could potentially pay for, or would they automatically exclude it?
So they would pay. So there's different parts of the policy that could be triggered. So let's say there's data that's stored in an environment that's just completely open to the world, and it's sensitive data. And if that's compromised, usually the liability. So let's say a business is sued because all their data is essentially out in the open for anybody to see. As long as usually there's no restrictions for that. So it's usually that would be like an unintended or unauthorized disclosure, same as emailing a list of social security numbers to somebody, whether accidentally or in purpose, and it wasn't encrypted. So the liability would be covered. The legal expenses to do things like notification, because if a bunch of individuals were out, other data was exposed. So legal expenses to review the laws that you have to comply with would be covered. Things like, forensics probably wouldn't be that.
Depending on the policy, of course, right?
Depending on the policy, but those are the things that are coming to mind that would probably be covered.
So let me restate the question, and this is more an exercise for me trying to encapsulate what I think they're asking. A company has a cyber insurance policy of some form, and they have an incident. To what degree does bad behaviors, insecure behaviors, lack of following the security best practices, whether they claim to be doing it not through claiming compliance like PCI or regulatory standards or whatever. I guess the question is a lot of us work for a lot of different companies. I've been a consultant for 20 years, worked with hundreds of companies. What they say they do and what they do is rarely the same. That's a reality.
Not always PCI.
And it's not always PCI related, although most of my work is within the realm of PCI. I've been doing PCI for 17 years. PCI.
Fine.
I'm just trying to buffer my counter. But I think the question is boiling down to whether companies claim to be doing the security best practices or not. Where does it usually fall down in terms of filing a claim and actually successfully filing a claim and getting the payout from the insurance policy based on whether they are or are not doing what would be considered security best practices? I think that's the essence of this S3 bucket question.
Or everything but PCI.
It comes down to the start of the process is still that application questionnaire that we put to our clients and that we have to furnish to underwriters. And those applications are going to ask for, are you doing all the right things? Are you actually doing the best practices? When you sign
stop right there. Who validates what their response is, whether it's true or not, whether it holds water or not? And when does the validation occur? Maybe that's the more important question.
Mike, correct me if I'm wrong, but oftentimes there isn't a validation. This is you're signing a document that say this is true, and there's a warranty on the document that says yes, this is true, and under penalty of perjury or insurance fraud, this is absolutely true.
I think we might have stumbled upon a problem.
Yeah, and I think that's where the insure tech space. So there are other insurance company entities that are closer to the carrier that are building platforms that organizations have to sign up on to get policies and do things throughout the policy period. And they are building some, high level. It's not where it needs to be. Vulnerability type assessments where and we're starting to see more of the external scans. Pretty much the only thing that we get from carriers right now is you've got an open, RDP port. What's going on? Can you close it? And if they don't, I think you could have issues there. So I think things are starting to get there, but I really believe the solution that we need to work towards is collapsing insurance and technology together in a way where you can actually do some of this validation or find some of these issues during a policy period, both to limit claims from happening, but then also make sure that people are doing the right thing. And I don't think we're there yet, but I do think we're getting closer.
All right. Well, our time is nigh, and we need to wrap these things up. We've actually let it run long a little bit. And guys, I appreciate very much your willingness to
Can I say you guys have been great.
Yeah, thanks for coming.
Yeah, this is awesome.
We have been minorly vicious and brutal, and to be honest, we've been much less vicious and brutal than to other cyber insurance people because you actually have answers and are willing to engage. Thank you. I give you guys an immense amount of credit.
in terms of sort of parting thoughts for you guys, Mike or Nickel, either or both of you can speak. But my final question and sort of your last chance to make a statement is, what are the top 3 or 5 things that you wish companies would consider before you start having the conversation with them? What are sort of the prerequisites? What are the things that companies should be thinking about before they start talking to a broker about getting a cyber insurance policy that you wish that they would consider?
So yes, I think some of the top things. So I wish, and again, this is not going to be the reality, especially with the clients that we work with. I wish they would have a cybersecurity strategy that maybe is like, 2 to 3 years out, where they had specific things that they were trying to achieve. I wish that they had, asset inventory lists. I wish that they did some data mapping so we knew what kind of data that they had. That they have, good service providers, because again, a lot of our clients aren't going to have the internal IT staff inside. That they're not just kind of listening to their recommendations, and they say they do security and they don't actually, do what you guys would probably consider, cybersecurity. So I wish a lot of those things were tightened up, because it would make our job a whole hell of a lot easier, because we'd be able to really get the questions answered probably the first time a lot more easily.
Bravo.
Just having that corporate culture of where security is valued is such a starting point. And so a lot of it comes into, if their first conversations about cybersecurity are with us, they're probably not going to be be able to check all the boxes that we would like them to. So I think as companies mature and grow and get more advanced, I'm hoping that in the greater marketplace, they are prioritizing cybersecurity so that they are better protected.
Wow. So appreciate your guys' responses, and it begs one last minute question in my mind. From where you guys sit, your experience, your exposure to your prospects, your customers, are there any particular industry verticals that are better or worse or better, more or less prepared, let's put it that way, at engaging you guys and including cyber insurance as part of their strategy? Any particular verticals that do it well? Any particular verticals that really suck at it?
I've seen the technology in finance firms are probably more advanced in their journey towards cybersecurity and compliance. I think industry, manufacturing, sort of more blue collar sort of companies are very lackadaisical and behind the times when it comes to this, despite the fact that all their machines are networked and they would have a big problem if the bad guys got in. So in my experience, healthcare has also been pretty good. That being said, I call in a lot of doctors' offices and they have AOL.com accounts. So maybe the sample size is not big enough. But
hey, Josh, remember when we were doing that PCI audit for a company and we found an XP machine in there?
Oh God, I've been to places where I find Windows 98 machines in the security offices.
Dude,
Thank God
Windows
that
ME.
stopped. Thank God that stopped a few years ago, but still.
Well, all right. So very interesting conversation. Again, very sincere thanks to you guys for being willing to come on and take the heat, whether we think it's been lighter than usual or not. It's from your perspective, I'm sure it's been a little bit interesting. So I appreciate your willingness to take the time, and really the overall goal is to try to help people figure out security and compliance, and in this case, cyber insurance. So thanks. We're certainly interested in having you come back sometime to continue the conversation. Maybe if there's some big major incident, and we want you guys to say, well, this is what we would have done, something to that effect. But from all of us as hosts, very sincere thanks for your willingness to subject yourself to our quirks and our passions. So that's going to wrap us this week for Security and Compliance Weekly. Next week, we're actually going to have one of our listeners on as a guest. Jim Gilson is going to come talk to us. Don't know what we're talking about yet because we haven't had the prep call, but he does work for Dragos, so something along those lines might come up. We look forward to hanging out with you next week. That's going to wrap us.